I want to talk about the online retailers. We've seen some really big moves in the retail ETF, the online retail, and there's 4 or 5 of them, but I just want to highlight a couple of them. The 75, 80% moves in here, ProShares online retail. I like the clicks. This is the long online and short stores one, where they actually have a short position in department stores, but they're all up essentially at this point. Guys, any thoughts? I get this question all the time. Other than gold, this is the most asked question about retail. Any thoughts on buying? This is obviously a bit overbought. Obviously depends on the work from home story continuing at this point.
I'll take a quick stab at it, Bob. I mean, in terms of it being overbought, I think that, I think there's going to be differing opinions there. I think that, like, even before COVID, even before the shift for a lot of people to being forced into an online, merchandising environment, there was already a strong tendency to use services like Amazon and other online retailers. So we were seeing that demand pre-COVID anyway. I think COVID just gave it a little bit of a fuel injection in a sense. So to say it's overbought, I mean, maybe perhaps it's been a little bit of irrational exuberance in a sense and jumping in really quick. But I think long term, I think this is the future of e-commerce, the future of how people are going to be doing business. I think even if COVID were to miraculously go away and we get life back to normal, I think online retailing is going to be here for the long haul. So in terms of a core allocation, I do think that those stocks are going to continue to perform well.
Yeah. Dave, you want to take a shot at it quick?
Yeah. So, I totally agree. I think this is just accelerating a trend that was already there. There are a couple of ways to play this. Bob, you pointed out clicks, which is the, 150% long, 50% short. The only issue I have with that is that it really has been hindered a little bit by the fact that not all brick and mortar is created equal. So, that short position includes things like Tractor Supply Company and Home Depot, both of which are up enormously this year because not everything has gone online. There is this narrow corner of brick and mortar retail that's actually had a phenomenal year so far. So that hasn't worked for you as well as you'd want. The portfolio, the long portfolio in both clicks and ONLN is the same long portfolio, and it's dominated by really a handful of companies. It's almost 30% Amazon, 15% Alibaba, et cetera. In this environment, I think I might like something like iBuy, which is the Amplify product here. It uses sort of an equal weighted scheme, so Amazon only gets to be about 2.5% of that portfolio. I think that can help mitigate some of the overbought concerns people have about the names at the top of the list here. But no matter how you slice it, online retail is expensive right now. I think the PE on ONLN is about 180 right now. So, yeah.
And they're remarkably similar. I mean, they all have like Overstock. They all have Etsy in them, for example. They all have PayPal and Stamps.com. It's rather remarkable. Not all of them have, surprisingly, have Amazon, but they're very similar names in all these.